Hey everybody, it's Tim Picciott, joined by economic analyst John Snyson, coming to us for some sketchy hotel somewhere up north. But anyways, today what we are going to talk about is a subject that we know a lot about, and that is money printing. And this Zero Hedge article explains it all. It's called Convoy Investments. The bull market of our lifetime is explained by two words. Money is a topic I visit frequently because it has been so central to our markets in the last decade. As money gets printed, the average price of everything goes up with the tide because there are more dollars in the system chasing assets. We must understand how much of an asset's performance is explained by traditional factors like appreciation of fundamentals and how much is explained by money printing. Below, I offer a simple but telling metric. In a vacuum, the S&P 500 going up 20% this year seems great. But then you realize that money supply has gone up an incredible 51% this year. So on a monetary inflation adjusted basis, the S&P 500 is sitting at a miserable negative 30% for the year. Of course, all that money printed is going somewhere else as assets like cryptocurrencies and individual stocks far outperform the money printing benchmark. Looking further back, S&P 500 has had an incredible run during the QE era. That's quantitative easing. I'm sure if you guys are listening to us this far by now, you probably know that. But started in 2008, clocking in at over 12% annualized return for over a decade. However, this seems much less impressive when we see that the money supply in our system has been growing at 13% a year over the same time. On a monetary inflation adjusted basis, S&P 500 actually lost negative 1% per year since 2008. In other words, the bull market of our lifetimes is explained by two words: money printing. And here we see a chart where in blue we have the stock market, in orange we have money printing, and you'll see that they have, pretty much gone up in tandem. I mean, they called people like us QE conspiracists, which is something that I think Neil Kashkari, one of the Federal Reserve governors, I believe, like William Dudley, a former Fed governor, said that as well. And stocks and other financial assets have come to be completely dependent on money printing, like drug addicts. And now we're going to go to actually a clip from none other than former Dallas Fed President Richard Fisher, who actually said something to the effect of, we are a market that was surviving on heroin and cocaine, and now we're being maintained on Ritalin. Again, this was a few years ago before all the, when the QE took a little bit of a pause.
I like to say that we injected cocaine and heroin into the system, and now we're maintaining our Ritalin. How's that? How do you come back to that one? But no, seriously, central banks, they did more than enough, and unfortunately, fiscal policy never followed through. And that's what everybody's waiting for. But
since QE started in 2008, and even more so this year, money printing has become completely disassociated from the real economy. Will central banks have the resolve to let markets go through this nasty withdrawal and rehab ahead? And right now, we're going to kick it to John Snyson, who knows a little bit about money printing, being a monetary historian. But John, what do you make of this article that we just read from Zero Hedge?
No, the money printing that's happening, Tim, is grand and epic in so much sense that it's the only ones that are printed more money in trillion wise in dollars was Zimbabwe back during the hyperinflation in 2008. So that's the only dollar that are printed more in time that what we printed now. But when you go and look at, for example, the base
coronavirus. Yeah. Printed what? Oh, we're making it rain. But then we've got
cash bar.
This one's it's a Trump money gun. It's starting to run out of ammo because we printed so much money last year. But there we go. What was that, John?
Yeah, no, this is the thing is like they printed so much and they bailed out, the banks. Like it's over $2 trillion right now in mortgage-backed securities that they're holding on their balance sheet. And I made some comments on some Wall Streeters, like trying to talk about it and, saying that, this is not good for the economy. It's like, yeah, no, it's you're witnessing the end of the whole monetary system. I tried to tell them. And then I think a lot of them are starting to figure this out. And that's why you saw today, Tim, Bitcoin just skyrocketed because Wall Street is entering into Bitcoin. It's not the general public at this time. There's some, of course, but at this time, it's actually a Wall Street and institutional, rally that we're seeing on the crypto market, and we're going to see a lot higher prices. You remember we had some discussions in our group that you can join, of course, our Discord group, about if Bitcoin was going to go deeply down, and and go down to what was it, like 5,000 or 6,000 or something. I said that probably not, because you're seeing the accumulation from Wall Street had just started, and it's it's a minuscule market. We got to remember, right now we just passed today $600 billion in market cap on all cryptocurrencies, and that's actually just less than silver's market capitalization. So the whole market of silver, precious metal. So what you're seeing is, I think what we're going to see is the continuation of stock markets going up, Tim. There's going to be some severe potential, if the Fed isn't doing enough, there's going to be some severe, ramifications, especially now when they stop kind of, like they're not going up very fast right now. They're actually falling in very similar to 2008, Tim. If you go and look at the chart and pull it out, it's very similar, like kind of track of where they're heading. So you're probably going to wait a little bit, and then probably next year sometime, you're just going to see another skyrocketing. And I think somebody talked about $2.8 trillion. Here in Canada, we're looking at 6 to, what was it? No, it was 6 to 8% real food price inflation. Because here in Canada, we printed, we increased the monetary supply about 500%, which is utterly insane. They basically got monetary insane.
I'm actually shocked that when you just said the silver market. I was actually shocked when you just said that it was so low. I mean, I actually just had to go fact check you. I'm like, oh, he's right. I mean, not that I would, don't believe you.
No, I actually the reason why I know this, Tim, is because when I did my cryptocurrency price potential, I actually took that into account. So I went and looked at different markets. So that's how I know the market cap off my head like that. There is, and the gold market cap right now is at 7.7 trillion ish. So I think we're heading to probably towards with Bitcoin, anywhere from 3 till 6 trillion, initially over the next couple of years.
Advice. But yeah, let's stick to the money printing aspect. Obviously, it's going into assets like Bitcoin and cryptocurrencies. Yeah. Do your own research, not financial advice. Best thing to do is probably start off small, a little time, or pay somebody to help walk you through this. Lots of scammers out there. Beware. But when it comes to money printing, there is so much debt, so much basically, derivatives that are tied to the debt. And we've got, this huge mountain of basically house of cards, where if you start removing one leg of the house of cards, then that affects all these other cards that are there. And the whole thing's come tumbling down, which is why this whole thing really started kicking off. I mean, you could say it kicked off in 2000, or you could say it kicked off in 2008, or you could say it kicked off, in October 4th, 2018, or you could say it kicked off September 17th, 2019, when we had the repo markets going insane. So effectively what happens if you have one of these legs drop out in terms of debt, because this money, I mean, this is fake Trump dollar bills, but this money is actually just based off of debt. And so if you get rid of the debt, you get rid of money, and the whole thing collapses. Our system is built on a fraud, which is what, and they know it's going to collapse. The game plan was to get us into some war with Russia, blame it on the Ruskies, and it would have been great if it wasn't for, damn Putin. But now that play didn't work. So now they've thrown the Hail Mary, and now we're in this coronavirus, pandemic, where they're going to blame the pandemic on having to reset everything, which is why guys like Klaus Schwab are writing books called COVID-19, The Great Reset, because they want to remake it underneath their own image, blame it on coronavirus, as opposed to blaming it. What it really is the fact that it was systemically set up to fail from the get-go, because the money is based on debt. And so there's no way out of it. And so that's why they have to keep printing, and they can't stop, because the whole thing would come crumbling down, the entire infrastructure. Now it's going to come crumbling down either way, in a hyperinflation or in a deflation that leads to a hyperinflation. So either way, both roads lead to places where, you're sort of screwed if you're doing the same thing as everybody else is doing. And so that's why, I do like people, looking into gold and silver and cryptocurrencies, and even to some extent stocks too, because of the fact, last year we were invested into the stock market, but also had hedges or downside protection, which is why, come March, we were only down 3 or 4%, because we were playing off the fact that the Fed was going to keep printing money. And they've even really surprised me. The amount of money printing that went on this year, even in February, I was talking about insane numbers, and even my insane numbers that were tinfoil hat at the time even got blown away from there.
Yeah, no, it's totally insane, Tim. And actually today I was listening to the FOMC after that with the press conference with Jerome Powell, and he actually was saying that, you know, there's a lot of disinflationary pressures around the world taking place, and we need to keep keep on making sure that that is not taking hold. So
did you
basically,
did you say disinflationary or inflationary?
No, disinflationary.
Okay, that's what I thought.
That's what it said. But what that means is basically deflationary pressure. So there's debt, you know, collapsing because people can't pay their debts. So that's what he's talking about in very simple terms, because disinflationary is like, for a regular person, it's like, what the heck is that? But that's
it's
what
like asset prices going down in 2008.
Yeah.
So, you know, an aging population where you have, you know, all these baby boomers who, you know, didn't save enough money. They needed to go downsize. And who are they going to go sell their homes to? A bunch of broke millennials. I mean, John and I are millennials, so nothing against millennials, although most of them are, you know, idiots.
But even their other assets, Tim, stocks and bonds, you know, there's a lot of deflationary pressure there, because they have to, you know, sell to someone. But if there's no buyers, well, the Fed is there to buy basically everything. That's
30 million people unemployed. That's deflationary. All this, a lot of money printing going to zombie banks and zombie corporations that are just there to pay interest on the debt. Also deflationary. But then we have the money printing, which is obviously, you know, very, very inflationary. And so it just kind of depends which one breaks out. And we could have deflation in some areas, and then like on, you know, electronic crap that nobody needs, but then you know, spy surveillance, but then there could be inflation on what you were talking about earlier when it comes to food. And so really, when you break it down, I think this is really the article that really sums up exactly what is going on, exactly why the market's at all-time highs and rocketing higher, why Bitcoin's at all-time highs are certainly contributing to it. And again, everybody do your own research. And John and I have been telling you guys that central banks is a scam ever since we started doing videos, since before we even started doing videos together. We've been telling people central banks are a scam. So this is just a quick little, you know, insight into, you know, what our podcast is all about. So this is just a short little video, but a lot of our best videos don't make it on YouTube because they're too controversial, or we're only putting up clips. So if you guys go to timandjohnshow.com, you can sign up for the email list, or you can go to our Discord server, which is bit.ly/Tim John Discord, all lowercase, or you can do the same thing and put Tim John email, all lowercase, to get our email list and be the first ones to get this groundbreaking and important information. I guess it's not groundbreaking that, you know, we're printing lots of money, but it is great information that maybe if you already know it, maybe your parents don't, maybe your grandparents don't, maybe your friends don't, and this would be a great thing to share. But if you wanted the videos first, got to get on that email list. But anyways, this is just a short, quick little video today because we're all busy. It's around the holidays, but, you know, I really appreciate John joining us. Obviously, you know, he's always joining us, and because we're a team over here. So anyway, wish you guys a happy holidays, and we will be back with more great episodes in the future.
Bye.
One. Thank you for watching our recent video. Behind me is the Jekyll Island Club, which is where the Federal Reserve was formed. And so in addition to making content and in addition to making, you know, different YouTube videos and library videos, I'm also a financial advisor with a great track record. 2019, we had got almost all the gains of the S&P 500. And then when everything hit the fan in March of 2020, we had almost none of the losses. What I'd really recommend, if you have not seen it, is check out my speech where it was given February 11th down in Acapulco, Mexico, uploaded to YouTube February 19th. And at the end of that video, I did a little GoPro commercial, sort of like I'm doing now, that was ad-libbed, where I told people what the investment strategy was. I told people that what we did is we were long the S&P 500 while also buying put options on the S&P 500. And what that meant was that was how we were able to get this, because I knew the market was going to either keep going up because of Federal Reserve money printing, or it was going to collapse because reality would actually set in. So, you know, how many advisors actually protected your clients against that? I mean, I would say hardly any of them. So unless you were in a position where, you know, you made almost all the gains last year and didn't you know, really participate in that many of the losses this year, then you don't have a reason to call me. But, you know, if that's not the case, then I would go check out the website, LibertyAdvisor.com, where you can book a time to talk with myself and to get a free consultation to see if we can help put you on a better path. Again, that's LibertyAdvisor.com, and thank you very much, and hope to talk with you and your family soon. Take care.